If you're just getting started in crypto and you found this video, then you've come to the right place. When I first started getting seriously into crypto, I didn't bother to research what taxes may look like down the line. Fast forward a year or two, and I'm here with thousands of transactions across tens of exchanges and multiple wallets, staking, Web 3.0 investments, the whole nine yards. If I'd bothered to do some research prior to jumping into this, there's a few things I would have done differently, and I'm going to share them with you in this video. Before I jump into the content, I need to throw out a few points. First, I advise everyone out there to pay your taxes. I'm not an advocate of trying to shirk crypto taxes or any taxes in general. It will only make your life hard. The second is the standard. I'm not a financial advisor. I'm not a CPA or any other financial professional, just a guy on the internet who's figured some things out and wants to share some information with you. The third is that I'm a US citizen, so my experience is based on that. There may be some similarities if you're based in another country, but please don't take what I say as gospel. Finally, if you find this content useful, I'd really appreciate a like and subscribe. If you have any questions or anything you'd like to see covered in future videos, drop me a comment. Looking back on my experience, the first thing I would have done is to research what goes into crypto reporting. Luckily, I've already covered this multiple times on my channel. But just for a quick recap, you need to understand that certain items are taxable and certain items are not. Selling crypto or swapping it for another crypto are both taxable events and must be done by converting the fair market value to US dollars at the time of the transaction. Receiving crypto is generally taxable as income unless it's received as a gift and it's under the IRS limit. Spending crypto is considered the same as selling, and the fair market value at the time of the transaction must be calculated. Buying crypto itself is not taxable. So, taxable events are typically going to be either capital gain or loss on a sale of crypto or income received in some form, unless it falls into one of the exceptions that I previously mentioned. So the point to take away from this is to track everything as you go. The second thing I would have done is to research how the actual reporting was going to be done. I'm in the United States, so I have to file my taxes with the IRS every year, just like every other American. I, like roughly 70% of those who file online, which I assume is nearly everyone at this point, use TurboTax. So there's a good chance that you do too. If you use a different service, you have to research how to file with them. But if I was a betting man, I would put a bet down that there's more similarities than differences between whatever service you use and TurboTax. The good thing is now TurboTax has the ability to import directly from a number of different exchanges. I bring this up because if I could go back, I would keep my crypto transactions probably siloed in one or multiple of those exchanges depending on my goal in order to keep the transactions from mixing across exchanges. In my opinion and experience, the single biggest difficulty in reporting crypto taxes is the freedom with which users can move funds from one exchange to another. This is good because this is part of the freedom of cryptocurrency, but it's bad in that it creates a reporting nightmare when it's time to file taxes with the government. For this reason, unless you do your best to keep all your spending in one place, you're likely to create a situation like I did for myself, which might be quite difficult to unravel. Chances are, if you're a big cryptocurrency fanatic like I am, that you might be very risk tolerant as it comes to some of these more elaborate projects out there. And for this reason, you just can't keep your hands off your coins and want to move them around and try things out. If you know you're this type of person, then you might want to do what I would do if I could go back in time, and that's to start with a good coin tracking application from the very beginning. Now, one thing I would do if I started with a coin tracking application is understand how good it is not with importing transactions and generating tax reports. The tracking application I use is Coin Tracking. It's www.cointracking.info. I'll put a link in the description. With this application and with many other coin tracking applications, you can import transactions through API keys, manually uploading CSV files, monitoring blockchain addresses, enter it manually. There's a number of ways. I'm gonna do a complete video on how to operate within coin tracking later. Now, the reason I'd recommend starting this sooner than later is you may find yourself in a situation where you're trying to unravel thousands or possibly even tens of thousands of transactions into a tax report when it's time to file your taxes. And believe me, this is not fun. You will spend multiple hours a day for probably a week or more, doing advanced learning on the internet, just as I did. And that's why I'm making this video. The reason I recommend using a service is because once you get over a certain number of transactions, you won't be able to submit a self-created CSV file to TurboTax and likely any of these other online tax filing services. I know with TurboTax, you have to, if you want to generate a self-created CSV file and it's over a certain limit, you actually have to print it out and mail it in and check an extra box on your return online, which is just extra pain to me. To me, the cost of paying for a tracking service is well worth it. If you're investing your coins right, you'll more than make this up just on gains, most likely. It shouldn't be that big of an issue. Particularly with coin tracking, you get the added benefit of choosing different accounting methods when generating your tax report. For example, for me last year, using the last in, first out method of accounting was much more beneficial than first in, first out, which is the default. So I chose that method. The only caveat is you have to use it every year on your crypto reporting going forward, because you can't change accounting methods because, you know, it's going over a long period of time, because you're always going to have some coins that carry over into the future. So if you're one of those experimental types that likes to try new things and you're going to be making transactions all over the place, do yourself a favor. Find yourself a good serviceable coin tracking app when you start. Thanks for watching. If you made it this far, you must have found some value, so you know what to do. Give that index finger a workout and hit the like and subscribe button. It costs you nothing other than a half a second, and it really helps me out. Helps me get in front of more eyeballs, and it enhances my ranking in the algorithm. It also lets you know when I post a new video, so sounds like a win-win to me. Anyway, I'll see you in the next video. Thanks for watching.